Hello and welcome to the Me Financial Podcast. I am Michelle Moses, your host. I am a certified financial planner, realtor, and former e-commerce site owner. And today I am here with Patrick Ritchie, and we are going to be talking about all things credit. I took a CE course from him and was just so impressed with all of his knowledge. And Patrick is a mortgage broker of over 20 years and the author of The Credit Roadmap. It's a written guide for readers to take control of their credit. He has extensive experience teaching finance at both the Ohio State and Arizona State University and is approved instructor with the Arizona Department of Real Estate and an approved instructor with the Arizona Association of Realtors. He has a Master of Legal Studies and Bachelor of Science in Business Administration. Welcome.
Well, thank you, Michelle. I appreciate you inviting me here.
Yeah, thanks so much for coming on. And I do have to say go Bucks because I lived in Columbus, Ohio. We could do an OH or something like that.
I know.
So today we're going to talk about credit, and most of my listeners, they already have great credit, and so we're going to kind of build off of that. Of if you already have, a high 700, 800 credit score, what are things that you can do to protect that, maybe even improve it, or just keep it the same way? And then he has, I know, some amazing stories about people that have unknowingly ruined their credit, or just, certain things about maybe some identity theft. So that's what we're going to be talking about today. And so why don't we start off with, so let's say you have an 800 credit score. And so what are some things that those people are normally thinking about, I guess?
Yeah, so the 800 FICO score crowd, their biggest danger is not utilizing the credit cards that they already have. So
Okay.
if you think about what is going into a credit score, and we're typically talking the FICO score, obviously. There's other scores out there. But from the standpoint of what is feeding that, what is creating that 800 FICO score? Well, usually it is going to be history. It's how long is that history? So you have a credit card that has an indefinite life, it has this indefinite history. Maybe I've had it for 20 years, 30 years. Once it gets to 7 years, it really will have a monumental effect on somebody.
Oh, so once you have your credit card for 7 years and you've been paying on it, obviously, and don't have you don't have all the 30 days late and things like that, then it really supercharges your credit.
It supercharges the credit. And if I had to say what is the most common theme that I see to an 800 FICO score, it is that somebody has at least one, but probably more like 2 or 3 credit cards that they've had for over 7 years, probably well over 7 years, probably we're talking decades, that they've kept at a low balance, that they haven't had any 30 days late on in the past 7 years.
Because it needs to be you need to keep all your balances under 50%, but if under 35% is the best, right?
That's the goal.
Okay.
And
so a lot of times what people do is they have multiple credit cards and then they just use some of the credit on each one of them. And that's the best way to do it. Okay.
And to give you an idea, a lot of times I'll see where somebody might have a 740 FICO. And it's because their credit card balances are maybe higher than they normally would be. Maybe they came back from vacation. Maybe it's holiday season, whatever. And so as soon as they pay that balance down, their scores may then jump to 810. So
it goes up that quickly.
Once it reports again. So whenever the timing, you never know the exact timing because of when a creditor is going to actually report to the 3 credit bureaus, but once they do pay that down, it's buoyant. It will bounce right back.
Okay.
So
all right.
So that's the good news is you can max out your credit cards because we don't need our credit every single day.
Yeah.
We don't need it every single month. I mean, I might apply for credit once every couple years. I want to keep it good, but in the same sense, I honestly don't need it to be super, super high. It's kind of like training for a bodybuilding contest. You can't live your life that way.
You can't always be at the 820 all the time. It's going to come up and down and up and down. Okay, and fluctuate a little bit.
And if I think about the highest FICO score that I've seen on paper, and that would be it was a classic FICO model of an 8. It was an 841.
Oh, okay.
And so he had, the reason he had this 841 is because he had an American Express card that he had since 1967. So that tells us another thing. If I close out a credit card, I'm probably going to see my credit score go down depending on what the age of that account was. So the older it is, the better. But if I lose it, if I close it myself, or the biggest pitfall for the 800 FICO score crowd is that a credit card that they've had a long-standing history on gets closed due to inactivity. Inactivity is the biggest danger for people with an 800 FICO score.
So you want to make sure you're using whatever credit that you have.
Because think about how many department store cards you have.
Yeah.
Maybe you got in the 90s, early 2000s that you haven't used. If you go 2 to 3 years without using a credit card, it's very likely going to be closed down due to inactivity, and you lose that history.
And I remember years ago, I used to go through my credit report and I would cancel the credit cards that I wasn't using, which was kind of not a good thing, I don't think, because I would cancel, whatever, JCPenney or Macy's or whatever I wasn't using.
Exactly.
And so that might not have been a good thing. And what I think of when you're saying all of this is, so I have these credit cards where I get travel benefits or hotel benefits, right? Yep. But they cost money every single year to have.
Yeah.
And so what I'm discovering is that I'm using the Hilton one a lot, and I like using Hilton, and that's where we travel, whereas the Marriott, their rewards program isn't as great for us. And I'm wanting to cancel that one. And so I'm not going to want to keep that one open as long. Do you see what I'm saying? Like, you're not going to want to keep paying the fee. So I could see keeping them open if they're free.
Exactly.
Versus like, it's a commitment if you're paying that yearly fee, and you got to kind of make sure. So I guess that's the game that the credit cards are playing, right? Is that some of these people, you are going to keep that credit card for a really long time. And so it's like a bank. You're not going to switch banks all the time because it's such a pain.
Yeah, if I had a credit card that was charging an annual fee for the rewards program that I'm in, I have to decide, is it worth it? If it's just $100 a year, not that big. If it's $200 a year, not that big of a deal. But in the same sense,
see, to me, even $95, I'm like, no, I'm not going to pay that.
But in the same sense, I've seen people close out because I look at credit reports so often where I can't help but look to see, okay, what could have made this score higher? So let's say we have somebody at a 750. And I'm looking at them like, oh, they had a credit card that they had for 20 years and they closed it 6 months ago, or they closed it 12 months ago. And so I inevitably will ask, why did you close that Citibank card? Oh, it was a rewards card and it was charging me $100 a year. So I closed it. I'm like, you probably just lost 70 points.
And that's going to increase, right? And so it increases their mortgage that much.
Yeah. So you have to look at it from a standpoint, if I'm paying $100 in an annual fee, what is the financial benefit
if I'm going to be going to buy a house?
History,
yeah,
and always be cream of the crop. And sometimes when somebody has really high FICO scores, they start taking it for granted on how they got there.
Right.
And we all know, pay everything on time. Don't get any 30 days late. That's the big thing. But making sure that we don't lose that history. That's the thing that people forget about.
Okay.
And because they look at the $100 annual fee, they're not looking at, I've got a 20-year history. It would take me 20 years to get this account again. It's worth $100.
Right. Especially if you're going to buy a house. I think if you knew that you were going to stay in your house, then maybe, okay, cancel it, whatever.
In 22 years of doing this, I can tell you, I've heard it many, many times. This is the last house I'm ever going to buy. I'm not going to need my credit anymore.
And then they need a house.
They need something.
Right.
And the one I will never forget, because they swore up and down, like, we will never, ever need a mortgage again. We probably never need to borrow money anymore. Well, their neighbor passed away, and in his will, and this was a house up north, they had the right to buy the land and buy the property, which was on their border. And so they needed a loan because it was more than they had in cash. And so it was only about a year, 2 years after they said that we'll never need a mortgage again. Now, fortunately, their credit was still great. It was all good. But you never know. It's, when you think about credit, why do we need credit? Well, it's opportunity, such as, buying my neighbor's land so that I don't have a development going in next to my property, or survival. Like if I own a business, I get a warehouse line of credit to make payroll in slow times.
Yeah.
Like that.
I think that's a great way to look at it, that credit is opportunity, because it really does open more doors, and it allows you to have a lower interest rate and to do more things if you take care of it.
And there's a saying, credit is always cheaper when you don't need it. So when somebody needs a loan, there's usually a cost. Now, if it's opportunity, it's not going to affect them in terms of, maybe they don't qualify because there's been some financial changes. However, if it's opportunity, they probably need it quickly. And so the better the credit is, the faster things can move.
If you get great credit, you can go online and get a loan, no problem. Yeah.
So if somebody said, hey, Patrick, I need a HELOC in 2 weeks. If everything's great, they can get a HELOC in 2 weeks.
Yeah.
Probably don't even need to have an appraisal done. And so just kind of depends on what it is that they need and the speed. And of course, the big thing is how much am I paying in the interest and all that.
Yeah. Yeah. Okay. Well, and I would say as someone with good credit, the thing that I worry about the most is something adverse happening out of my control, like having identity theft or something like that. So what happens if something like that happened, like let's say something did happen and then I found out that my credit score then went into the 600s or something because of it. Is there like a letter, and then I wanted to move 3 months later? Is there something that says, hey, this isn't really me?
Yeah, so the most important thing in the event of identity theft is to get with the creditor who has reported that account on the credit report, get with their fraud department and get an affidavit a fraud affidavit. It's a fraud affidavit.
Okay.
So get a fraud affidavit. The fraud affidavit is going to be your declaration that this is not mine. That's somebody else without my authorization.
So then they would then give that to you.
They would give to me. I would fill anything that I know about the event. I'm going to fill it out. Now, I probably don't know about the event until I actually saw it on my credit report, which is why we should check our credit report at least once a year just to make sure there's nothing on there that shouldn't be there. So you do the fraud affidavit. You give that to them. They should, under the Fair Credit Reporting Act, that should clear it off of the credit. Now, the problem is when they suspect that the person actually did have a part in opening that account. And it's hard for them to prove. It can be hard for us as a consumer to prove. So always be watching for any hints of identity theft. If you start getting an odd amount of junk mail out of the blue, just watch for things because you never quite know. I mean, the thieves out there are tricky. And they're smart.
Well, this is where I want to bring up one of my favorite things to tell people, and I told you this before we started, was the, what is it called? Opt-out, website?
Optoutprescreen.com.
Optoutprescreen.com, and it stops all those pre-approved credit card offers coming to your house because I heard that they'll steal those and then kind of set them up.
Yeah.
And not only does it just save you mail, but I just think from just a safety standpoint, it's just a good thing to have. So I've signed up my whole family on that.
Yeah.
They'll be at my house and I'll be like, we're going on opt-out pre-screen. And just to save all of it,
it's a good idea because you don't want credit card applications because when you have good credit, you're going to be solicited a lot to get more credit. You don't want credit card applications going to your old addresses because you just don't know.
Oh, I didn't think about that either.
So I remember this was years ago, but when I was in college, there were 70 of us that lived in one house. So every year you had,
all the different
people going out. We had a stack of mail for people who had moved out years ago. And I would say 90% of it was credit card applications.
Yeah.
Because that was back when they were really pushing the credit cards on college students. And so it would just be too easy for somebody to commit fraud.
Right.
And just have the card sent to that address.
Well, and this is kind of taking another right turn. I mean, there's just so many ways to go with this, but so with the college people and building credit, right? So, okay, so you have a great credit. And I do think that that's something that we think about is how do we help our kids also get better credit? Is so co-signing or how does that happen?
Yeah. And so we always have to be careful with co-signing, but it kind of going back to the idea of keeping credit cards open. If I keep a credit card open, maybe I'm not really using it. I have this Best Buy card that I've had for a long time. I don't really need a whole lot from Best Buy, but at least once a year, I'll go buy something at Best Buy so that I have, at least have enough history that they're not going to close it due to inactivity.
Okay.
So if I wanted to help, my oldest son is 19, my youngest son is 11. So the 11-year-old I don't have to worry about right now. But if I wanted to help out my oldest son to build credit, I could add him on as an authorized user to that Best Buy card. And then that history, he's now getting a 15-year history on his credit report. That's going to be a major.
So you pick the oldest credit card and then add them as a cosigner.
Add them as a cosigner.
Okay, so you're not
as a cosigner, but as an authorized user.
Authorized user. Okay, so cosigner is when they would go get a loan. Yep. And you would co-sign it. So you don't want to do that, but you want to
avoid that if we can.
Yeah.
Sometimes you just have to, there's no choice. That's just what would have to happen to make what the goal is. We can't reach the goal without co-signing. Sometimes that's when it comes to buying a car or perhaps when it comes to a mortgage. But adding as an authorized user could definitely make it better and easier for somebody to qualify.
Okay.
Because now they're seeing a boost in their credit score
Right.
based on the history of that account.
Okay, so using the oldest credit card and then adding them as an authorized user.
Correct.
Okay, that's a great idea.
So that's a big one.
Yeah, that is a really big one.
So and in that way, so the biggest question I would have is, well, what if the person I'm adding as an authorized user, what if they have any issues on their credit? Does that come back to me? And the answer is no, it's isolated to just that account. Now, legally, what we need to realize as an authorized user is if I add somebody on as an authorized user, I need to really trust that person.
That they're not going to run it up, right?
I don't have to have a card issued to them, but if they got a hold of the card, any charges they make, that would never be fraud, because sometimes people will call, past clients will call, and they'll say, hey, I let my sibling or I let my oldest child, I had them on as an authorized user. They took the credit card and maxed it out. Is that fraud? Well, it's not fraud because you authorized it.
Yeah, that's not fraud.
So we have to think in those terms of, I'm giving.
That would just be like, oh, I messed up. Sorry.
Exactly. So that's the thing that people need to be aware of. And it's a nice, it's.
Yeah,
really
I think that's a really great idea. Yeah, like
boost.
what a quick way, because you can just go online and add an authorized user onto your credit card. Yeah.
Now I have to tell you the other side. It's a two-way street. So here's the downside to it. If I added somebody to a credit card as an authorized user, and then let's say I get sick and my bills don't get paid and that account becomes bad, it's going to affect the authorized user. And I've seen that on credit reports where I'm like, oh my gosh, we have to get this authorized user account off because you're probably 150 points lower than you should be because of the negative history from this authorized user account. Sometimes people get added on as an authorized user and they didn't even know they were added on.
Right, like a husband and wife.
Even roommates. I've seen oh, my roommate added me. I don't even know why they did that. And then the roommate stopped making the payment. So you literally could have a charged off credit card that's reporting on somebody's credit report where the account doesn't belong to them.
Oh my
but they were
gosh.
authorized users.
Well, no wonder you got to check your credit
now
report.
we're trying to unwind that. And so that's why my advice when somebody wants to buy a house is let's get started early. Let's make sure there's no unforeseen circumstances that we need to address, because we can unwind that. We can, there's definitely ways we can get that taken care of. But if you want to buy and close in the next 30 days, okay, you might be paying a higher interest rate as a result of not at least getting that credit look.
Right, and if we look a couple months ahead of time, then you can fix it.
We have plenty of time. If we have 60 days, we're good. If we're trying
really?
20 to 30, because because I utilize the consumer finance, consumerfinance.gov, the Consumer Financial Protection Bureau's website. If a creditor does not, if they do not remove the information that shouldn't be there, if they don't do it in a relatively expedient manner, usually we give them 30 days. But if we need to, we can file a complaint through the CFPB. And I've seen a lot of great outcomes in doing it that way, because basically, if you've ever called customer service and got frustrated because number one, you're on hold,
right?
They don't care, they're not empowered to make any decisions to help the consumer, perhaps, especially if you have anything that's in a gray area. Now, being removed from an authorized user account, I wouldn't call that a gray area. Like, it's not my account if I'm an authorized user, but it is on my credit report and it is factoring into my credit score. So it does definitely cause an impact to me. Getting it removed should be simple, but it's not always that simple. And I'll give you an example. I had a client where her score was probably 100 points lower than it should have been. She was trying to refinance at the time. Her father had passed away. He had added her on as an authorized user so that she could go to the pharmacy and get his medications for him. It just made it easier rather than him trying to reimburse her. Well, when he passed away, there was nothing in the estate, and so the credit cards just didn't get paid, which is fairly common. It's unsecured. It just gets charged off. Well, since it was on her credit report, it went 30 days late, 60 days late, 90 days late, 120 days late.
So they had somebody to go after.
To 180, and they can't go after her, but she now has 180 days delinquency on her father's credit card on her credit report, and then it just shows charge off. Now, the collection can't show up on her credit report because she's just an authorized user. She's not a borrower. She's not a co-signer.
It's just that there's 180.
It's there. So it's 180 days delinquent. So now what happens is her other credit cards, they start looking at it like, oh, we better lower her credit limit because something bad's going on. So that's another reason to monitor. But we have to have this awareness that if I'm going to be on as an authorized user, or if I'm going to add somebody on as an authorized user, this isn't something we just set and forget. we need to make sure that we're paying attention to it, because if mom and dad have added their kids on as an authorized user, or their grandkids, well, if mom and dad start getting sick, mom and dad pass away, these things will have adverse.
You need to have, you need to be aware how that's going to affect you too.
And so she spent about 4 months trying to get it off of her credit report with the big bank who was the credit card issuer. And they just kept saying, fax us the death certificate, fill out this form, fill out this affidavit.
Oh, I know that game well. Yeah.
So when I looked, I said, I got a better idea. Let's just file a complaint with the government, which would be the CFPB, which would be the consumerfinance.gov. She filed her complaint with them. So in going round and round and round with customer service, the difference in filing a complaint on consumerfinance.gov is that now it's going to a compliance, because it's a complaint to the government agency that enforces, their, any, the laws and the requirements that bank has to follow. And so now it's going to compliance, it's going to the legal department. It's not going to customer service. Customer service doesn't have the power to do things quickly necessarily, or doing things
And that's
wrong.
where you want to get to is legal. I mean, it's the same thing when you're dealing with like an insurance policy.
Exactly.
Yeah.
So what's happening is now a complaint comes into the legal department or the compliance department from the CFPB directly to say, there is a consumer complaint against you guys. Here's what it is. And they say, oh, well, let's make this go away as fast as possible. Oh, you're on as an authorized user to a deceased client of ours. Okay, we can do that. We can remove that. But even in the gray areas, and I'll give you a quick example. Somebody, let's say they know they're going to be 30 days late on Sunday. And so they call their creditor and say, hey, it's Friday afternoon. It's going to be 30 days late on Sunday. I need to make a payment today. Do I need to make it online? Should I come into a branch? I need to make sure I don't get 30 days late. And they say, oh, just make it online. It'll be fine. But that person didn't realize, oh, we're in Arizona. And so, we're behind the East Coast. And so they make it, but it's not prior to the cutoff, and it doesn't hit their account till Monday, so they end up 30 days late. So technically speaking, yes, they were 30 days late. They actually were 30 days late. They tried to prevent that from happening by calling that creditor and saying, hey, I realize I'm going to be 30 days late. I have the money. I need to make the payment. What's the best method to make the payment?
And then they were giving incorrect information.
And so it's that gray area of, yes, that consumer was 30 days late. However, they did make the effort to try to avoid that, and they were given bad information by the creditor's representative or employee. So in that type of a gray area, that's where the CFPB can really come in handy for consumers, and filing that complaint through the through consumerfinance.gov to say, here's what happened. And I've seen several times where the creditor will say, there's nothing we can do about it, stop calling us, to where it gets reversed and they get an apology letter.
Wow. So you use consumerfinance.gov a lot.
Yeah, that is for because keep in mind, I'm a mortgage broker who just knows a lot about credit. From a credit repair standpoint, like if something needs to be fixed, if I need it done fast,
it's the quickest way to do it.
And it's free. It doesn't cost anything. Because I see people sign up for all this credit repair stuff, and they're kind of like in this sludging a lot. Like they're just paying monthly stuff to have stuff pushed around, and they're not getting any action, and stuff might be removed, but then it's put back on there. So if it were me, if I had a problem, that's how I'm going to.
You just go straight to that website. Yeah. And so consumerfinance.gov is there to help dispute things that the credit agency or the credit cards put on there, right?
It's anything that's
to challenge one of their
that's coming from a lender, any institution that is within the scope of the Consumer Financial Protection Bureau. They're the enforcement agency. So basically, anything that would be on the credit report. I did have one recently where it did not fall within their jurisdiction, and so they kicked it back and said we can't do anything with this. And it was because it was one of the cell phone carriers. People hear these commercials that say, "Bring us your cell phone. We'll give you you switch from one carrier over to us. We'll give you a brand new cell phone and buy out your old one." But here's the problem: people don't read the fine print. People have a major problem reading fine print, or they don't understand it. And so they think, well, I can just stop paying my bill to company A because now I'm at company B. They gave me a new phone. They said they're going to buy out my old one. And then they end up in collection with company A because they didn't
pay off the first phone.
Yes. And so there's steps to it. It's not magic money that just all of a sudden pays off your debt. So people need to pay attention to that. that. And so I see these collections show up on credit reports from cell phone carriers. Well, since they're not a lender, if it's directly from the credit, or if it's on the credit report directly from the cell phone carrier, that's not in the jurisdiction of the CFPB.
So consumerfinance.gov is specifically for credit cards and mortgages and
correct. Any lending. Yeah, exactly.
Okay.
So it's good for probably 95% of the problems that consumers might encounter.
Okay. All right. Well, that's very interesting.
Yeah. Yep.
Yeah, that's nice. And then, so that kind of comes up with other things that if you think that there is something that happens, that happens on your credit report. Like if I'm ever suspicious or there's things where I'm starting to get like some fishy emails, I just go on the credit agencies and I put a fraud alert on there for 6 months instead of like paying these companies to watch my credit, or give me or to give me updates on what's going on with my credit. I feel like that we can do that ourselves now. Like, cause I feel like there's all these companies out there that are, trying to sell us these services, and I don't feel like we really need them.
Here's how I view it. The best method is probably to just freeze my credit report, which is essentially making it inaccessible.
That's not a fraud alert.
That's not a fraud alert. I'm just making my credit report inaccessible. So that way, if somebody, so I'll give you an example, like this is firsthand. When I go to pull somebody's credit report, if their credit report is frozen, nothing comes back. So I have all their information. I have their social security number, I have their date of birth, I have their address, I have their full name. I have all, there's 5 critical points that you need to pull a credit report. I have all the points, but I can't pull it because it's frozen. So when it's frozen, it's inaccessible by any third party. So I can't access it until they unfreeze it. Once they unfreeze it, boom, it's instantaneous. I can immediately pull it through and we're good to go. So freezing is the best thing to do, because if I just add a fraud alert to my credit report, or even if I just add like a fraud statement, if I do anything like that, all that's doing is it's there, but it's not preventing anything. If I freeze my credit report, I'm actually preventing the act from occurring in the first place because they couldn't access my credit. So if somebody had my social security number and had a fake ID with my information on it, and let's say they go to Home Depot and then they apply for a Home Depot credit card. Well, if they have all my information, well, it should go through, they should be approved, and they can start charging and doing fraudulent activity in my name. But if I have my credit report frozen, the credit report can't be pulled, so that they can't make a credit decision, so it's going to be denied. So that's the difference.
And that's what I feel like happens when I do the fraud alert, though, is that, so let's say I went to Macy's and wanted to open up a credit card because, I was getting whatever percentage off. Yeah. It would turn it down.
Oh, because of
the fraud alert. And then basically what they do is they mail something to your house, or they try to call you later, and then you can open it later. You just can't instantaneously open the credit. Okay. It's just more of a pain to do it. But what you're saying is that freezing it just basically takes it off the market completely.
Takes it out, takes it off.
It's just the next step.
Yeah. So I would say it's better in that sense, because if somebody has a credit, if they have a fraud alert on their credit report, I see it. So I've pulled the credit. I see the fraud alert. We proceed. And then the underwriter, before closing, before actually granting credit, the underwriter, one of the conditions would be the underwriter has to call the number in the credit, in the fraud, on the credit report in the fraud section, and confirm that it is our borrower. And then they need to say some things. But is it possible that the identity thief,
if they had all your information, then they could still do all of that. Exactly. Okay, so that makes sense, because the underwriter doesn't know that they've never met the person face to face, and so they don't know that it's somebody from another country or something.
It's kind of like if I have an alarm on my house, I want the alarm that doesn't even allow anybody to get inside my house. I don't want the alarm that tells me somebody's in my house, and I want the alarm that just prevents that from going. So it's the lock. I want the lock. I want some lock, to
keep them out completely.
They don't even they have no access. They're not getting in at all. So I don't want to protect myself. Once I have an intruder, I want to never have an intruder in the first place. So that's what freezing does.
Okay. So how do you freeze your credit?
So the easiest way is just to Google Experian credit freeze, TransUnion credit freeze. What's the other one? Equifax credit freeze. Just do all 3, and you have to freeze them individually.
Yeah.
Now, my advice, which I think most people would already realize this, do not lose your password, because I had so many clients lose their password because they forget about it. 'Cause life goes by fast. Like this year's gone by fast.
And
Next
it's
year will
3
go by
different
fast.
credit reporting
It's 3 different
agencies
credit-
that you're
yes.
logging into.
And so when I'll say, hey, I can't access your credit report because it's frozen, I need you to unfreeze it. They'll say, I can't remember where my login is. I remember what it is. And so that's imperative, is just make sure that when the time comes that they need their credit, that they can easily go unfreeze it. Because literally, if they know their login and password, unfreezing it is like instantaneous.
So it's just like the fraud alert. I mean, I can go on and I turn it on and off whenever I want it.
Exactly. Yep.
Okay. So it's the same thing.
That's exactly. So if I know, hey, I'm going to go buy a car and I want to see what the financing looks like, I'm going to unfreeze my credit report. If I say, you know what, today I'm going to get a rewards credit card, or this week I'm going to unfreeze my credit report, and then I can go freeze it again. Now, there's one little caveat that I would make people aware of, because we can't just freeze it and then not pay attention anymore. We still have to pay attention for anything it doesn't prevent stuff from coming into my credit report. So let's say that somebody stole my identity and leased an apartment and then skipped out, didn't pay it, and now there's a collection in my name with an apartment complex for something I've never even signed up for.
Oh, so even though it was frozen, they could still...
Yes, so you would think that the freezing would prevent them from being able to rent an apartment in my name, and it probably would. So that probably...
But if it wasn't frozen when they rented it, and then you froze it after they rented it, and then they moved out, okay.
So it doesn't stop fraudulent collections. So we always have to watch out for the fraudulent collections. So preventative measure is to just lock the credit report down so that credit can't be accessed even if somebody has our information. That's the best method. But for anything that's still out there, well, it's still necessary to pay attention.
Right. That makes sense.
I took a class a couple weeks ago that the Arizona, it was a prosecutor. It was like the state attorneys prosecute, like their enforcement and whatnot. They did a webinar about title fraud, and I was listening to it. It's very interesting. But when you think about it, here in Arizona, if somebody wanted to get our signature, it's public domain.
That's true.
It's all out there, and there are these fraudsters who are literally getting fake notary stamps. So when a notary's license expires, if they don't renew it, well, whether they renew it or they don't renew it, they're supposed to return the stamp. The stamp belongs, I believe, to the Secretary of State, who issues the notary license. So you do have this issue of fraud can go deep. It can be, hey, we know what this person's signature looks like based on recorded documents. We have a fake notary stamp. There's a lot of damage you can do with stuff like that.
My gosh.
So when you think about how advanced, and it's really not that advanced, it's like literally I could teach my son's in 5th grade. I could teach him how to go find documents online on the recorder's office.
Yeah, it's really easy.
It's not that hard.
No, it's not hard at all.
To order up a fake notary stamp, I don't know how hard that is, but I'm sure it's not that difficult to get. And so when you think about those possibilities, then that's just scratching the surface of the ways that identity thieves work. If I just freeze my credit report, I probably
won't have a problem.
Deter a lot of the things that happen. So,
okay.
But I always have to pay attention. Regardless, I have to pay attention.
That's some great stuff, though, to keep your credit high and to make sure that you're not having to deal with headaches.
Because that's the thing is we're busy. Nobody wants to deal with this stuff. So to take these little measures that take a little bit of time to set up, and we have to pay attention.
But doing it once a year.
But that's easier. Believe me, that's
just do it when you're doing your taxes or something.
So I'll tell you a story. I was doing a lot of conferences when the book first came out, and so I literally, I think it was in like 30 different cities in like almost 30 days. So I was just like flight. So I was living at airports, and I was in Nashville, Tennessee. Went to a sports bar, and decided to just kind of relax before I went to the next city. And the server, he was very chatty, asks me for my business card. I'm kind of like, well, I'm not licensed in Tennessee, so I don't know why, but here, take my business card. What I learned is 48 hours later, somebody charged $15,000 on my business credit card. And
is that the card that you had given him?
That's the card I'd given him. So now, so think about when you go online to order something and pay with your credit card, what do you need? The account number, the expiration number,
The CVV code.
CVV code, the 3 digits, and a billing zip code. So by giving him my business card, he now presumed he might have my billing, and it was the same. And so yeah, $15,000.
Wow.
And that was a card I only used for flights, for rental cars, for hotels, and then in that instance for my business meal expense. And so that he was the only one that had ever actually held the card. Everything else was just done online.
Was done. Yeah. So you knew where it was.
Yeah. So, and he was the only one that would have known the billing.
So did you call the place? And
I called, the Nashville Police Department didn't really care. And it all got reversed really, really quickly. But here's how fast they work. So I called my bank that was the card issuer. And keep in mind, I mean, I'm making the personal guarantee because I'm the business owner, but it's under my LLC's name. So it's not even on my personal credit report. So any credit card that you have in your LLC's name, your corporation's name, that's probably not on your personal credit anyway. But I still want to maintain it because I want my business credit to be good. So I acted as soon as I saw, because what I did was when I got back home, I immediately paid everything off from that round of trips. But I noticed, so it was normally like a $30,000 credit limit. So usually as soon as I paid the full balance, it would immediately show $30,000 available. Well, this time it didn't. It showed like $15,000. I'm like, well, that's weird. So I called. So even before it showed anything on my side.
Oh, you called?
I called and said, hey, this is weird. I just paid it off in full, and usually it goes to $30,000, but it just went to like, oh, there's like a ton of pending charges. Like there's a flight from Thailand to England. They're like, they can see, I'm like, what? I'm like, no, I'm like, they're like, there's all these iTunes purchases. And so I said, no, it's all fraud. And so they took out as much as they could, but whoever flew from Thailand to England, they got their flight in because they couldn't stop that.
Oh my gosh.
They can reverse a charge
fast
enough. Hopefully they got stuck in England and
yeah.
go back. But see, that's it. That we have to be aware of that sort of stuff.
Right. That's a great story.
And so here's a piece of advice. I would never use a debit card. I would never let that debit card out of my sight. I wouldn't use a debit card online. And I wouldn't use it in a restaurant either, because I don't want that debit card out of my sight. Because if I'm arguing with a credit card issuer, that's a lot better because I have a lot of federal laws on my side.
Rather than the debit card that's coming straight out of your checking account.
Money, because the credit card, it's not my money. It's their money.
Okay. And that's why they're so quick to cancel this and to do all the...
Because they're the ones.
Yeah.
So ultimately, it's the merchant who feels the pain. The $15,000, the merchant now lose. So they stole from the merchant. Yeah,
exactly.
So it's the merchant ultimately.
It's not the credit card company that's actually eating it. Credit card company is
probably not even going to, I mean, they're going to take some loss, but very minor. It's the merchant who suffers.
Yeah.
And so it's a big deal for small businesses.
Yeah, it is a big deal for small businesses. Yeah. Absolutely. Yeah. Yep. Yeah. It's interesting. I was buying Christmas gifts for my kids last week, and we did, it was a $750, just a combined gift. This is a very big birthday and Christmas gift as a disclaimer, everybody.
As a December birthday.
Yeah.
We don't like combined gifts. But.
No, they say they do. This is a big gift. And it's actually not. I was buying it for the grandparents. And it was $750, and it got declined. I had to, and so then I tried American Express first. And I didn't see the email quick enough, And so then I was like, I'll just try another one to approve it. I'll try another one. And so then they also rejected it, and I had to go through. And so then the merchant had to go through and try to charge it again in 48 hours. That was the lowest amount which I thought was smart because, this is for like gaming equipment for video games and stuff.
Yeah, probably way more likely to.
Exactly. To have more fraud. But I thought that was really interesting that it was so low because I do buy airline tickets and things like that. But even at $750, they were, and it's also Christmas time, it was Thanksgiving. So I'm sure.
I made a Quest 3.
It was. How did you know?
Because my son wants one too.
Oh. Okay. Hopefully this is going to go out after my kids hear it. So what are some ways then? Okay. So that's the fraud piece of it. So what are some ways that people unknowingly, hurt their credit and they think that they're like helping? Because you had a story before we started about a guy that did the co-signing.
So here's the piece of advice I would have when somebody co-signs. I've seen a lot of smart people make dumb decisions when they've co-signed with family members. So first of all, if I was going to co-sign, it would only be with a family member. Because essentially when somebody comes to you and says, hey, will you co-sign with me? They're saying, I don't qualify on my own, so I need you to help me qualify based on, I need you on the hook as well. And so you have to really trust this person. And so I've had friends, people I went to college with where they're smart, but they do dumb things such as, hey, I co-signed with my stepson on a car. He couldn't afford to make the payment. It was a 5-year term. We were 6 months into it. So I drove the car to the nearest bank branch that financed the vehicle and told him to take it back. Is that going to hurt my credit? Yes, it is. First of all, that's not how you do it. And
did you burst out laughing?
Sorry. I did.
I'm sure sometimes you're that's a really bad idea.
So
anyway.
Otherwise smart people doing things like that, just because his excuse was, well, I never even drove the car. I'm like, but you
co-signed on it. Yeah.
You're probably more obligated than him. He might not even technically be on it. Cause that's the thing that can happen is people think, oh, I'm co-signing on this car. And then the other part, the person who's actually, that was buying in the first place, they're not even on the note.
Yeah.
So that can happen. And
I've seen a lot of girlfriends co-sign for their boyfriends and then,
bad idea.
And then they break up and then they're kind of stuck with it. And then something happens like a wreck or just he stops making payments. It could be so many things. And then and then she's on the hook for making payments about a car that's not even drivable or, things like that. So
that brings up a good point. Gap insurance. Get your gap insurance through your insurance your car insurance provider. I wouldn't get it separately because why would you want two different insurance companies working on the same claim? And so I know when somebody buys a car, they're going to be offered, hey, do you want to get gap insurance through us? Here's why
just
you need
go
it.
with your State Farm or Progressive or whoever you have.
Say, I need gap insurance and keep it all in, under one umbrella. And I say this because, and this isn't common, but I had a client who she had a vehicle that was relatively new, but it got totaled. Well, she got gap insurance through the dealership. The dealership never turned in the paperwork, so it was not in effect. So now she's trying to litigate with the dealership. She still has a car payment that's due. She has a car that's not drivable because it's totaled. And of course, she bought it brand new.
And then she's trying to prove that they didn't turn in the paperwork.
So it's a giant mess. So avoid that giant mess by just going with whoever you trust with your car insurance currently. You should trust them with your gap insurance.
Yeah.
There's no reason to not to. But people, you're sitting there, you're waiting for the finance to go through, whatever. And people will say, yeah, that sounds important, throw it in there. Insurance should be through
an insurance company.
Professional,
okay.
And you would want it to be all under the same umbrella anyway. So, because then even if it was done correctly, you don't want the fighting between the insurance companies and whatnot. I can't imagine why you wouldn't want it under one umbrella.
Right.
So
that's true.
I see that.
Because the higher limit you have with an insurance company, the better off that you are. Like the more they're going to fight for you kind of thing. And want their money back, really. Yeah.
And speaking of insurance, here's another thing just popped into my head. Let's say that a parent lets their kid borrow their car. It's the parent's car. The kid goes out, makes a poor decision, has a little too much to drink, causes an accident. The insurance company will cover the accident. But in the fine print, if there's, I don't know if it's criminal damage or neglect, or it's the fact that somebody was inebriated, whatever the case may be, whatever the actual verbiage in their policy is. If somebody causes an accident while they're intoxicated, the insurance, the policy holder can be sued for the payout. So I saw something on a credit report. It was a $50,000 judgment from one of the big insurance companies. And I said, okay, what's going on here? And they're like, in this case, it was actually, she had let her brother borrow her car. He had an accident. He was drinking, had an accident. So they covered the accident, covered all the damage.
So they paid the other party but then they came after her.
But then she had to pay $50,000 out of her pocket because she let somebody else,
and not her brother. What if her brother had been insured been on the insurance as another driver? They probably, that wouldn't have mattered because she was the payer.
It could have been her. It was because of the drunk driving.
Yeah.
So you have to be really cautious about stuff like that. So in the blink of an eye, she's nice and does a favor for her brother. he does her a horrible act by drinking and driving in her vehicle, causes an accident. Now she's being sued for $50,000.
Right. And then it's on her credit.
It's on her credit.
And now her credit score is going down.
$50 a month for the next 2 decades.
For the rest of her life.
And so people don't think about these split-second decisions that can cause a lot of financial harm. So,
Right.
yeah.
Okay. So those are ways. So most of the time that you see that people unknowingly hurt their credit, it's by like closing credit cards that are really old.
Yes.
And then co-signing on like mostly cars. Is it mostly cars?
If you're going to co-sign, just make sure you're in a position to make that payment.
Of whatever it is.
Yeah, that, like you need to go into it saying, you know what, I may be making this payment at some point in time, and be prepared for that. Make that your rationale for signing. Say, I can afford this. I can make this payment. And
does that happen with houses too? I mean, most of the time I feel like people are co-signing for cars, but
oh, I see it on houses all the time.
Houses all the time?
Yeah.
Okay.
Because as soon as I tell somebody, hey, you qualify for $250,000, but if you can get a non-occupant co-signer, you can qualify, for what you want. And so I'm sure you're familiar with the book, The Millionaire Next Door.
Oh, yeah.
And they talk about social welfare. Social welfare is very much alive where mom and dad are still.
I absolutely agree with that.
Giving out the money and yeah. So
just remember that when you're comparing yourself to other people. It is very true.
Don't compare yourself to other people.
Yeah.
Because the person who's driving around in the fancy car might be living in an apartment. The person who's living in a big house might drive the worst car you've ever seen, but they have a sweet house.
And it might be empty.
And yeah, you just never know.
I know.
And so sometimes it's not uncommon. Like I'll pull a credit report and people have like $120,000 in credit card debt. Like, so literally if you have a husband and a wife, they're each making 6 figures. So let's say they're bringing in at least $200,000 as a household. They probably shouldn't have $120,000 in credit card debt. But it's not uncommon. Mm-hmm. And so
because to them, they can just pay it. They're like, I can just make the monthly payment.
I'll get a bonus at some point. I'll pay.
Yeah.
But then they don't, like something else comes up. And so living outside of their means is, I see that a lot where it's kind of sad.
Yeah.
It's like, so, but that's the world that we've always lived in. I mean, it's not just,
it just is what it is.
It's been that way. I've been that way for 22 years since I've been in the business.
Yeah, absolutely.
So just, don't compare yourself to others because you don't know what the parents are doing. And I see the underbelly of this, and believe me, there are a lot of people out there that wouldn't have what they have if it weren't for their wealthy parents or their wealthy grandparents.
Yes,
wealthy parents and wealthy grandparents are constantly giving their adult children money.
Mm-hmm.
There are 40 and 50-year-olds who are still getting allowances. Not kidding.
Yeah, I agree.
Because I have to know where all large deposits come from. A large deposit for Fannie Mae and Freddie Mac is anything that's 50% or greater than 50% of their gross monthly income. So if their gross monthly income is $12,000 and they have a deposit of $6,001, anything above $6,000, I would have to know where that money came from. Now, if it's payroll, that it's easily, you can see what it is right there in the bank statement. But otherwise, I need an explanation. I need a paper trail. And so it's not uncommon. Oh, my mom gave me that because my mom gives me an allowance. So
yeah, or just gives me money every year because they don't need it or something like that.
And a lot of people do capitalize. They'll capitalize on the how much can I gift tax free. So that does happen.
Okay.
But yeah, you just don't know with somebody's situation.
Right. No, you don't, and you shouldn't compare. Yeah, because you just don't know.
Just because you live in the same neighborhood, or even just because you work for the same company in the same position, you just don't know.
Yeah, you don't.
You just don't.
It really depends on like how much they're paying. Yeah, what their family situation is, and this is why people do talk about generational wealth and how it does help people and. All that, but that's what we're not talking about. But yeah, it's just,
but
this is just.
see a lot of co-signing on mortgages, and same idea. I need to be prepared that, hey, I would be able to pay this mortgage until we could sell the property if this person I'm co-signing with lost their job or.
I'm prepared to take this over.
Yeah. So.
Kind of thing. Okay.
Something that happened recently, so I assume that the vast majority of the population is intelligent, but sometimes people do really unintelligent things. So I was asking what happened with this one account because they just stopped paying it. They're like, well, it was a car loan and they all of a sudden they sold it to another lender and we had to make payments to them. And we said, you're not who we borrowed the money from, so we're not going to pay you. And I said, seriously? Like, you decided to not make the car payment because it was a different bank? They're like, yeah, because that's not who we borrowed the money from. Like, okay, like if you read the note,
that they can assume
it's
it. Yeah.
say that, and it can be assigned to another. It can be assigned to another lender or any servicer, and so being smart about things. And if somebody's not sure, then call somebody else and ask.
Yeah.
what should I do?
And call the 800
So,
number and make sure and get some
or
proof or whatever.
Go to consumerfinance.gov and say, hey, my car loan company, now I have to make my payment to another company. Can they do that? And they'll say, yes, they can. And so just rational decisions. Sometimes I see people make just totally
Just really rash.
what?
I just don't feel like doing that, or it just
seriously,
piss me off.
That's why you have a 90-day lane of car repossession. Like, are you serious? So
Yeah. Okay.
yeah, not common, but that one happened recently.
Okay.
I'm still stunned, as you can tell.
Yeah, I get it. There are certain
me up at
things.
night.
Yeah, there's certain things that I'm like, what? I don't know how that happened.
Yeah.
So you've brought up consumerfinance.gov quite a few times. So you really like that website, and
I like it because it's a very efficient tool. It doesn't cost any money.
And I feel like people don't know about it.
People don't seem to know about it. It came about in 2016 when the Dodd-Frank Act was maybe a little bit before then, because the Dodd-Frank Act started coming out like 2012 and it was released in sections up until 2016. But the Dodd-Frank Act established the Consumer Financial Protection Bureau, which was this new agency that kind of took over to do what the FTC wasn't doing. The FTC was going after big, bad players. Like, it had to be a massive fraud for the FTC to get involved.
And then this is to help the normal person.
This is to help just the average person down the street. And and they've done a good job.
I love that. That's good. That's good to hear. Yeah. Okay, well, wonderful. Well, thank you so much for all this good information. Are we missing anything that you feel like we should talk about?
Let's go back to the co-signing.
Okay.
I want to talk about the CEO of a pharmaceutical company.
Okay. Oh, this is a story you were telling me about before.
All right. So he's making plenty of money. He started this company. He's got 500 employees. Everything's going great. So his brother-in-law says, hey, you got all the money. I got the brains. Let's invest in real estate. And he says, okay. Well, long story short, the brother-in-law was not making the mortgage payments on time. So the CEO, he's on these mortgages. Well, he's not paying attention to stuff. He's a CEO of a big company. He's busy. Well, they go to get a corporate line of credit, another one, and they get denied because the CEO has a 601 FICO score because of these mortgage rates.
Wow.
The board of directors, so they're doing research to come up with new drugs. The board of directors was going to oust him. And they said, we can't have this impediment because we need this money. And so we'll put you in a different position, but you can't, we can't be applying for
that brings up,
finance.
that brings up an important point. Like, if you own a company, I mean, your credit is very, very important.
Exactly.
So
people can say, well, I'm not going to be buying a house. I'm not going to be buying a car. I'm not going to be doing this.
But if you're a business owner,
did you start a business? And, even just one thing I learned when I was teaching at Ohio State, these students were being denied internships because of collections on their credit report. That's part of the background check, not in every absolute position, but it definitely, when it comes to pharmaceutical, that was a big one.
And in finance too. I would lose my license if I filed for bankruptcy or something like that. Yeah, there's a lot of
I have to have my credit pulled for my NMLS licensing, and so it's like.
And again, so credit is opportunity. It really is just something, and I view it kind of like education or keeping your credit clean. It just makes your life easier.
It does.
Like, if you just have these things just checked off, it makes your life easier, and it opens up all these other opportunities that you're not going to have these hurdles. So yeah.
One last thing I would point out about that CEO. So he called me because he was a past client. He said, hey, what do I do? You're the guy. What do I do? I said, okay, it was late. It was legitimately late. All you can do is ask for a favor at this point. So be really nice and say, hey, is there any way you can remove this? I'm the CEO of such and such company. If I need to open our business checking and savings there to make this happen, put me in touch with a VP. And ultimately, because he was rich and powerful, he was able to get that off of his credit.
Because he could open up his checking and everything there.
Because something like that can be removed from the credit report at the sole discretion of the creditor under the Uniform Credit Classification Management Policy Manual. That, if you need to go to sleep at night, get some insomnia, read that book. But they can do that. They can remove it at their sole discretion. They just choose not to because the Credit Data Industry Association tells them not to if it's legitimate. But favors can be done.
Okay.
So.
All right. Well, thank you for that story.
You're welcome.
Thank you for all the stories, and thank you for being on. That's
for having
Patrick
me.
Ritchie, and his book is called The Credit Roadmap. If you're interested, he does say it's a little bit out of date.
A little out of date, but I am working on a revision.
He has a lot
Amazon.
of great information, and let me know if you have any other questions. I'd be happy to pass it on, and all of Patrick's information will be in the show notes. And thank you so much for listening. Be sure to leave a review and subscribe and tell your friends. I hope this helped clear up any confusion and just made your financial world feel more free. So thank you so much for listening.